Welcome back. Still with us, Swarup Mohanty of Mirae Asset Investment Managers, talking about smart beta investing and how you should approach it. It's still a very nascent concept in India, but it is expected to pick up quite a bit considering the global appeal as well. Swarup, how has the alpha factor distinguished itself as a performer among smart beta indices?
See, actually, the alpha factor plays out to the rule of distinctly moving between large and mid caps.
And first, tell us what is the alpha factor for people who don't know.
Yeah, I mean, the alpha, as the word says, aspires to give you returns above the market. And that's where the name alpha 30, say for our case, it's an alpha 30. We pick up the 30 stocks which we feel will be the formation of the portfolio, which will outperform the market. This, the factor moves dynamically between large and mid caps, and as per the market cycles, tends to pick them up as per the rule, underlying rule. When you see that over a period of time and you see the underlying cyclical nature of the market, it tends to then catch those 30 stocks which then tend to outperform. Till now, it's done quite well. Time will test in the going forward, because the more the volatility is in the market, these factors are more tested. And when you look at, say, COVID as an example, some of these were tested very, very rigorously. And on the comeback, they did come back. But in this short period of time that it has been there, over the last 2-3 years, it's done fairly well. And the dynamism of its ability to move and ruthlessness at which the rule comes in and drops stocks and picks up new ones is what really makes these strategies very powerful.
Do we use a lot of, does the industry use a lot of generative AI tools as well now to sort of pick stocks, use filters, the criteria, etc.?
I think a lot of algos have started being used now. Algo is very different from AI. AI sits on an algo and tries to learn or teach the algo. I think we are yet to start. We just recruited our head of AI last month, so we will probably in the next 1 or 2 years try to build our own AI generative sort of support to fund management. Hopefully someday we might see the first AI generated fund in market. Please differentiate between AI and algo. They are two very different things. Factors are kind of an algo. It's a rule-based thing. But AI, when it comes in, tries to learn from that and generates far higher information than what an algo does.
Okay, so and what role does the dynamic shift between large cap and mid cap segments play in the performance of smart beta indices?
See, I think it's the same as what a fund manager aspires to do on the active side. Picks up the stocks that they think will do better in the future. But here the only difference, like I've been harping time and again, the rule does it. So on the day of rebalance, it will definitely pick up the stocks which cater to the alpha factor and drop the stocks which will go out of the alpha factor. Unlike, say, it is possible that the fund manager might not take it on that day or might take it that day. There is no subjectivity. But this dynamism to move between large and mid, thankfully the markets have been cyclical enough to give those opportunities to the factor to play out, and that's why this outperformance has happened.
Okay. And how do rolling return performance of smart beta indices provide insights into what the long-term performance can be? On an average, what are we looking at in terms of a long-term performance for smart beta indices?
See, I think the rolling returns bring out the consistency of any return, and it's true to any fund as we speak. But as the factor then plays out, or any factor plays out over a period of time, the rolling returns is always a superior way of analyzing the consistency of that strategy. For that matter, any strategy. Of course, if the outperformance has been there, rolling returns will be superior, especially for 2-3 strategies we are seeing to play. For that matter, if you look at the low vol, I think the low vol across the market has also played out very well on rolling returns. So we are beginning to see some of these strategies play out, but I suspect once they start becoming strategies of 10 years, 15 years, you will see the real power of rolling returns coming out in them too.
Okay, so can we discuss the practical application of smart beta strategies now? How can investors use it effectively in their portfolios? Because as we were saying earlier, right, it's a very nascent concept. It hasn't really picked up steam. Why do you think it hasn't picked up steam yet? And what is your advice to investors who are watching you right now?
See, broadly, if you look at Indian mutual fund data has enough biases in picking up funds. People typically, and industry data will tell you, people buy last 1 year return and redeem last 1 year underperformance. It's beginning, the birth of financial planning or portfolio formation based on goals is just about starting off. And once we see merit, more and more merit into that, I suspect a lot of young will get into that sooner than, say, people like us did, because we understood goals quite late in our life. we will see advent of such products forming pretty decent part of people's portfolios. Now again, formation of the portfolio is very centric to the person's goal. Now, I am not a fan of saying that the alpha or the factors are high risk or low risk. It depends on the risk profile of the individual and the understanding of the underlying investment which they want to make. Good factors can play a great part in the core portfolio also. And one can obviously use some of the risky factors to form satellite part to get that kicker in that portfolio for that additional return. So they play both parts, as well as the core as well as the satellite. But one can today form a proper portfolio with factors only. I mean, with a mix of good active, passive and factors, one can form a very strong portfolio to withstand some of the volatilities of the market.
Okay. And by satellite, you mean over and above your regular portfolio, right? Just for those who don't understand what satellite portfolio means.
I mean, when you look at the core portfolio, you talk to any fund manager, the fund manager will tell you buy a good company at a good price.
Yes.
The good, strong, large companies form the core portfolio, which gives you, attempts to give you a more stable return than the fluctuating return. That is invariably the larger, stronger companies in the market. The satellite portfolio then comes in to catch some of the high risk or trends in the market to give you that kicker in the portfolio. Correct. Some of these factors say...
A little bit like gambling, if you want to say.
No, it is calculative. I won't say gambling, but if you have a view. Like today's market, the market has moved in a certain manner. The rest of the market is open for you to buy. And if you feel at this point of time some great companies are available at some great prices, then you can buy them slightly higher than your allocation so that, longer term return on the rebound of those stocks can be higher.
Okay, absolutely. Finally, because the market is a bit volatile, right? Before we let you go, before we end the show, what's your view on what's happening right now? Because it is a tricky spot. There is a bit of a corrective phase. No one knows how long the corrective phase would last. Are you worried about a major protracted correction, or do you think this is just par for the course?
Sonia, again, there are two people in the market. There is a buyer, there is a seller. A buyer would want the market to go down. The seller would want the market to go up. I'm a buyer in a story called India. The more the market goes down, my SIPs get more units. I get more value for my buck. So when you look at this story, and I always end all my presentations with one slide now, do you look at Sensex at 70,000 or do you look at India at 7 trillion? It's how you view it will define your approach, right? It is going to become a 7 trillion economy. When you look at that, these kind of corrections are great times to buy stocks which you've probably missed in the past, or buy strategies which you've missed in the past and strengthen your portfolio. I've said in 2017, 18, 19, redeem India at your own risk. I say that even now. This is probably the only country in the world growing at 6-7%. You don't get those stories at these prices because of these corrections. Yes, the geopolitical nature in the world has made data fragile. If you see sudden U-turn in the interest rate projections, is taken all of us by surprise.
Correct.
And that's the beauty of the market. Once you think you know the market, it will surprise you.
But geopolitical events have always been a great buying opportunity also in the past, right? So that could continue. One thing that's also working in India's favor is the demographic dividend, right? Everyone's talking about that. How long do you think it will take before we reach a mature stage in the demographic dividend? I'm asking from a stock market point of view. And also the other thing to supplement it is job creation, which is now a bit of an issue, right? Do you think it could be a lost decade because of the lack of proper jobs that are created in the market to capitalize on this demographic dividend?
So yeah, like you rightly said, if 60% of world population under 30 are in this country, the demographic dividend is there for all of us. But at the same time, it has to be supplemented by job creation and, more important, the health of people. If these two are not created, then after a decade, we'll see those playing out. I'm sure the powers to be will address it, but those are true concerns coming out of India. But nothing can take away this decade from India. I mean, the present situation will take it past the decade. And if these are not addressed, then maybe in the 11th and 12th year is when we should talk about the impact on this. But according to me, and this something which we've echoed time and again, it's the time to buy India at this moment, and every correction is welcome, if you ask me.
Okay, and I mean, we haven't even got a correction yet, right? It's sort of a corrective phase, but you're saying if it continues, then always go ahead and buy. Perennial bull, I think, Swarup Mohanty, right?
I'm a buyer, yes.
You're a buyer, okay. Thanks a lot for joining us. It was a pleasure speaking to you and trying to understand and educate our viewers about, several concepts. Hope to have you again on the show.
Thank you so much, Sonia. Thank you so much for having me.
All right, with that, it is curtains down on another edition of Smart Money. Thanks a lot for watching. Keep writing to us. We love receiving feedback from you. Until we meet again, have a great weekend.